The world's most powerful central banks are no longer on the same page. For the first time in years, a massive divide is opening up between the world's financial titans. While the US just cut interest rates, Europe is talking tough, threatening to hike them. This isn't just a disagreement, it's a policy war. And the global economy, and your money, are caught in the crossfire. We're about to take you on a rapid-fire tour of the economic battlefield, starting right now in the United States. The Federal Reserve did cut interest rates, but the cut came with a massive catch, an unprecedented descent, with 3 policymakers breaking ranks for the first time in 6 years. That division spooked investors who hate uncertainty more than anything. The result? A chaotic market rotation. Money fled the high-flying AI tech sector and rushed into the safety of small-cap value stocks, which hit record highs. The bottom line? The U.S. economy is flying into 2026 with a divided crew at the controls, especially as jobless claims hit their highest level since September. But while the U.S. is easing, Europe is sending the exact opposite signal. Markets were bracing for rate cuts, but the European Central Bank came out with a surprisingly hawkish tone. One board member, Isabel Schnabel, even signaled an openness to future rate hikes. This tough talk is happening as the United Kingdom's economy is collapsing. The UK economy shrank again in October, contracting for a second consecutive month. Just one more month of bad news means an official technical recession. The ECB is trying to talk tough on inflation, but its hawkish stance threatens to tighten financial conditions across the continent, potentially pushing the UK's dangerous slide into a full-blown crisis. Meanwhile, another major economy is preparing for a truly historic move. Meanwhile, Asia is a tale of 2 empires on diverging paths. In Japan, markets are now fully pricing in a landmark rate hike from the Bank of Japan, a decisive step away from its decades of ultra-easy money. And they're doing it despite a worse-than-expected downward revision of the country's GDP. Then there's China. Its problem is deepening deflation. The Producer Price Index has now fallen for the 38th straight month, dropping a painful 2.2% in November alone. Think about that. The prices factories get for their goods have been falling for more than 3 years. It's a massive red flag that demand is collapsing and brutal price wars are not stopping. This global chaos sets the stage for a critical week ahead. So, what are the key risks to watch? First, the US gets a critical inflation report that could completely change the Fed's path. Next, we get major rate decisions from the European Central Bank, the Bank of England, and that historic move from the Bank of Japan. Then, we'll see if China's upcoming data reignites its deflationary fears. And finally, the big question: will the United Kingdom officially be declared in a recession? Like, share, and subscribe for more content just like this. And for a deeper dive into what this all means for your money, check out our weekly market podcast, now playing on our channel.